Hello, everyone. Welcome to our typically Wednesday Q&A. Well, I guess we're releasing this on Saturday, right?
Yes.
Okay, so we're pre-recording this Q&A for you guys on Thursday. You'll be watching it on Saturday. But for those of you who don't know or tuning in for your first time, or you want to get us to answer your questions on air, submit your questions to us via email to questions@itmtrading.com. We aggregate them all, pick the ones that we feel like, haven't been answered before, or it's been a while since we've answered. That's going to give the most value to you as the viewer. Ask them live so you get a real spontaneous, organic response. So I have Lynette Zang, our Chief Market Analyst, with us. I'm Eric Griffin, President of ITM Trading, and today we're doing it via Zoom because Lynette is at her bug-out location. So I'm in the Phoenix location, and she's in her bug-out location. So you get to see, we actually have 3 different studios for Lynette. I don't know if you guys have noticed, but we have the in-office, we have her home, and her bug-out location. So bug-out location is the one with the wood in the background. All right.
It's true, because it's a cabin.
That's right. All right. So EJV asks, what are your thoughts on what the stock market will look like after the reset? I know Lynette mentioned she is avoiding it currently. What are some differences we could see in a post-reset market? So what are your thoughts on what it'll look like, and then what are the differences that you see from today to then?
Well, if history repeats itself, which is the most likely outcome, you're going to see the stock market not go exactly to zero, but drop dramatically near zero. It will wash out all of those zombie companies. I mean, and we're going to be going through that even before, but it's going to wash out a lot of companies that are really not viable, but have just been hanging on because of a lot of debt. We'll be able to see who is the survivor, who will survive. And then when we see that cup accumulation formation, then I tell you, I'm going to plan on converting some of my gold into stocks. So that's what it's going to look like. It's going to look like a cliff just boom down almost to the bottom, not completely, but almost to the bottom. And then that'll be the buying opportunity. Once we see that accumulation pattern, that's when we're going to know who's survived. And of course, we always have the option to go in, which I think is a really good idea anyway, to look at the 10Ks, to look at the financials of the company to make sure that they are healthy. But it's going to wash out a lot of garbage. So right now, it's too hard to tell what's garbage and what's not garbage. And anything, with all of the money that they pumped in, everything is so ridiculously and severely overvalued. So that's what it'll look like. Did I answer that whole question, Eric?
I don't know. I got distracted because I'm using this for the first time, and it's super loud. So I didn't hear it all the way because I was trying to adjust this because it was so loud. We'll go on to the next one. Okay, so Beard Papa asks, this one's a question. It says, question for Eric. We know how Lynette is getting ready for what's coming. What are you doing to prepare for the economic collapse and shortages that are coming? Okay, that's something I've actually never answered on this channel. So I started, like Lynette, prepping in 2000, roughly around 2009. I thought, when the Lehman event happened, and I thought for sure, I thought it was going to get a lot worse. I didn't anticipate they were going to just start flooding the market with liquidity to bring us out of it. And it certainly looked like with the amount of money that they were flooding into the economy that we were going to see massive amounts of inflation even right during that period of time. Didn't you feel the same way, Lynette, back then? Because it was unprecedented. So I personally had already built a majority, and I always tell this to my friends and family too, is I think it's important to build your wealth, your wealth and your barterable position, your wealth protection and your barterable position first. So I had already done a lot of that pre-2008 with gold and silver to give my wealth insurance, and my, really my inflation and hyperinflation insurance was already in place. But then once I saw this, then I started with food. Obviously, I think is the first thing you got to do. I think Lynette would agree, right?
Absolutely.
Yeah, so food, I got myself dried food so that I have backup food no matter what. And then, and I have little kids, so I have like dried foods too that I know that they'll eat. And then security, so I personally started doing training, firearms training, medical training, so that I know, how to utilize firearms. And so my security portion is pretty robust and strong. I also started learning how to hunt. Been hunting now for 10 years so that I know how to do that, provide food, live food if I need to be able to do that. And then, obviously the backup water sources. Now, I haven't gone as far as Lynette has because Lynette recently, as you guys know, purchased a bug out property and has been building out that pretty robustly now as a part of her strategy, which that's something that I will hopefully be able to start doing next year. So my plan will get a little bit more robust, but I'm definitely behind the curve when it comes to where Lynette is as far as that's concerned. And if you guys want to know more about those types of preps, like the rest of the mantra, so if you get your wealth position and your barterable position in place and you want to start doing more of that, obviously the BGS channel, we're starting to build that out with more and more content so you can learn more about how to build out the mantra pieces. But I would get your gold and silver position in place first, because for those of you who haven't heard us say it before, if you don't have that in place, it makes it hard if something happens, especially like a Lehman event, then or like a hyperinflationary event, you have more options when you have real money, real gold and silver. You can be proactive even when things are in a bad situation. So important to get that in place first, and then once you have that, then I would start getting all the other preps in place. So anything you want to add to that, Lynette?
Well, it's just, you just follow the mantra. And if you're behind the eight ball, you look at where you're most vulnerable. But I 100% agree with you that you've got to get the wealth preservation in place, because if you don't have that in place, you're not going to be able to buy anything. You're just going to close off all your options. So yeah,
okay.
That's good.
All right.
Now I don't personally like dried food, but
yeah, well, I mean, it's easy enough that you can buy
if you're hungry,
a 10-year supply of, a supply of food that gets you to a certain level for a certain level of time, right? You have a certain shelf life that'll stay good for as an emergency prep. But for you, I mean, your gardens, your tilapia farm, all that kind of stuff definitely is going to provide you with a better food source than what I currently have. But hopefully I'll be able to catch up to you next year at some point.
I hope so. I hope everybody can, because that's what we really need to be, as independent and self-sufficient as possible going into this mess.
Well, and if you are like you, right, are right now with being able to provide your own food sources, inflation has less of an impact on your lifestyle. Right? Because
That's a fact.
You didn't having to be subjected to those types of costs, which is nice.
Right. Yeah. That is a really good point.
So there is a benefit, right? Even
huge benefit.
Even if you never had to use it, you still get that benefit.
Right. And of course, this is all off grid. So what's happening in the energy sector, I know it's way worse in Europe, but I wouldn't look at anything anymore and say, well, that's over there, that's not going to impact us here. Because even though we are in a process of deglobalization, we are still, particularly the financial system, is still incestuously interconnected.
Mm-hmm. Well, and you see, when you look at the charts, most of the charts, when you're looking at them side by side, U.S. and Europe, they always look very similar, right? The ups and downs are right next to each other. Okay, so Preston A asks, so this is a yield curve question, okay? So does the length of time the curve remains inverted tell us anything? The current inversion first appeared, but briefly, in late winter, early spring, but then returned a few months ago and has consistently remained inverted. Quite a lot longer time than I've seen before. This feels ominous. What do you think it means?
You know what I really think it means, and I really find this so interesting, that I really think I'm like the only one that talks about this, but we are at the end of this experiment. And so I think that what it means for, and the depth of that inversion is as deep as almost anything else that I've seen. I think it's the second deepest as well historically. So I think that what that's telling us is that we are at the end and we are running out of time, and that the upcoming recession is going to be far more than just a recession. You know, I personally think it's going to start out as a depression and go into hyperinflationary depression. So I think that's what the length of time and the depth of that inversion. And yeah, remember, we started talking about it when it was the 20-year bond that inverted above the 30-year bond. And I said, watch out, because it's going to go to lower and lower, shorter and shorter maturities. And here we are, the 2, the 10, the 30, you know. Yeah, I think it means it's really, really nasty this way comes. Something this way comes.
All right, so Carlos O asks, some people say that hard assets like gold won't protect you from the big reset that is coming. Is there any reason that you could think of that would make that true?
Well, I would say 6,000 years of history, and every single time, 100% of the time, gold has indeed protected you. So I think that somebody that says it's not going to really doesn't know their history and wants you to do something else that is in your best interest. And when you look at dynastic wealth, which is wealth that has lasted in families at least 300 years, the foundation is always gold. And really a lot of that is because of every single financial asset. Number one, gold runs no counterparty risk. And it has the broadest base of functions and the broadest base, therefore the broadest base of buyers. So there's 100% of the time there's demand, sometimes more, sometimes less, but there's always demand. And there is nothing else that can say that, nothing.
True. All right, so I don't think we need to say anything more about that question. I'll move on to Jim P. Asks, I have a concern for the reset that is coming, but I'm living off of Social Security and my 401k. I have some money saved in the bank. And should I buy gold and silver, and how much of that cash position should I use?
Well, you know, what we do here is custom strategies that are based upon the repeatable patterns that I've been witnessing and studying since 1989. And, you know, I was able to build out this spreadsheet. I mean, if something happens the same way, no, can I guarantee that in the future it's going to happen the exact same way? No, I can't, because that's beyond my control. But I really do believe if something's happened the same way, you know, over 4,800 times, 100% of the time, and we're doing the same thing, we're most likely to get the same results. So those repeatable patterns on actually all asset classes, but, you know, especially gold and silver, there are formulas that we've been able to build in. So while I can't do a blanket thing, because your goals, your needs, what you have to work with are going to be different than mine, still the formulas all work the same. So the strategy we execute is essentially the same one that I'm executing for myself, based upon those patterns that repeat 100% of the time. And, you know, I know that Eric and I have been working on actually even making that spreadsheet a little bit friendlier, etc. But we can put in what it always has to start with your goals, what you have to work with. Yes, you need to have gold, because if you don't, your 401k is going to evaporate into the ethosphere. And even though I don't think they're going to stop Social Security, they'll threaten just to get you going. But hey, they can just print the money to pay you. But it's what that Social Security will not be able to buy you. And that should be really apparent over this last however long that inflation has been running so hot. Is there something that you can add to that?
It's funny that
because I know we've been working on that.
Yeah, well, I'll get to that in a second, but you had mentioned about like Social Security, and my grandfather told me, he said that he retired, I think he said it was in 1989, and he had a $2,000 a year between his pension and his Social Security. He was getting $2,000 a year, and that was enough for him and my grandmother to live. They had their house paid off, but it was him and my grandmother had enough to live. And he said that now that same $2,000 didn't even cover a quarter of what he needed to live off of, which I thought, wow, that's amazing.
That's a year?
Yeah, but
$2,000 a year? Wow.
$2,000 a year, because they had for the pension, they had no cost of living increase, right? So that just shows you that if the money printing accelerates even more, it's going to dilute the purchasing power that much more. So you do need the gold and silver will help protect you about that. But we get this question from clients all the time, and so it's real easy when one of our clients called. I think we had a one that was a pretty decent sized one that somebody had called in this same scenario, and they spoke to one of our consultants, and we were able to take all the inputs that they gave us, and then we just put it into the sheet, and then the sheet puts the outputs out, because we've built it in such a way, like repeatable patterns, different formulas that we use to make certain kind of predictions, and then we just put the inputs in, and it kicks the outputs out to us, and then we're able to build a custom portfolio, gold and silver portfolio, specifically for that client's needs, which then sets them up for the future. So that's why I think Lynette says it's hard for us to say, oh, yes, we know for sure you should buy gold and silver, but how much? We can't.
Depends.
Everybody wants us to give you a blanket of like, this is what you should buy of each thing and how much, but it totally depends on, for us at least, ITM Trading, and the way that we have it. The way that we feel to do right by the customer and have integrity with what we do is, putting it through our system to help us kick out the results that, is going to best suit what your goals and objectives are. So,
right. Because it's going, and so that it tells you how much cash you need, how much silver you need for your barterability and the kind, and how much gold you need for different functions, depending upon if it's paying off a mortgage, or it's converting into income producing assets, or it's leaving a legacy, and so it really is dependent on you, and as it should be.
Right.
But it's the same basic strategy that we're all following for ourselves.
Right. Well, because we're pre-recorded, I don't have any live questions, so that's it for us for today. And remember, this is going out on Saturday, so I don't know if you have any reminders that you want to tell anybody about.
I don't think so.
All right, then.
Sorry, it's not up in front of me.
It's all good. So if you click the Calendly link below. This has been an interesting
week.
Yeah, if you click the Calendly link below, you can always talk to one of our consultants who can help you if you're interested in having a strategy built, or we're always here available to do that. Just click the Calendly link. You can set that up anytime.
So I will really encourage you to do that, though, because if you fail to plan right now, it should be pretty clear that they have a plan. So you need to have a plan. And that plan that you have to put your best interest first, because they're not going to. And, as you all know, without a doubt, it is time to cover your assets. And I would do it much sooner than later, because I don't like what I'm seeing. Yeah. And here, the foundation
and we're going into a recession that could be deeper and
100%
than it's been. So
100%, because, there's only one way to fight inflation, and that's with a recession. Just like there's only one way to fight a recession or a depression, and that's with inflation. Those are the only tools that the central banks have. And they don't want you to make money. They don't.
Sorry, guys, we lost Lynette. It might be due to the connection. from the bug out location. Submit your questions to us at questions@itmtrading.com, and we will see you on Wednesday. Until then, be safe out there. Bye-bye.